Okay, recording this video after close trade Wednesday, 27th of August 2014. Hope your trading's going well. I want to talk about the euro in this video, but before getting on to that, just to say, put out a video at the end of last week saying we kind of reached exhaustion and expecting a rollover. This rollover is taking forever. It's like we're at the top of Everest, we're on oxygen tanks, and we've just looked at the gauge, and the gauge has just hit zero. And it just feels like we totally run out of air up here. There's a lack of demand, loads of Rambo patterns kind of going off everywhere, and it just shows, just creeping up on less and less volume. At some point that demand just runs out and we kind of flip the other way temporarily. But what I am waiting for is these little pullback to end of trend patterns to ripple through these higher time frames. This is the usual setup: the daily, the 135-minute chart, and the 45-minute chart here. And all we had with today's activity, finally we put in a little pullback level. I was expecting this early on in the week to have a little bit of a drop off to put that pullback in. So with tomorrow's activity, Thursday's activity, we'll put in pullback to end of trend, and then expecting some weakness after that to do the same thing on the 135-minute chart, pullback to end of trend, and that'll sync up with all this, kind of amateur up bars, Rambo patterns, all the stuff kind of going on there. Got an email from Tom. He was saying he couldn't match up the charts on the 135-minute chart with mine, and it was kind of a basic error. It's like, remember, this is the @es.d. That means that's day session only. A 135-minute chart on day and night makes no sense to do. There's 3 135-minute bars in a day session. 3 times 135 minutes is 405 minutes, and that's the length of the E-mini day session. So just if anybody's trying to do that using the @es continuous day and night, don't do that with a 135-minute chart. Use tip bar charts on overnight activity to kind of compress it. That makes far more sense. Anyway, so that's what I'm waiting, pullback to end of trend. And just talking about this kind of running out of juice up here at these highs, just show you on all these indices. So this is the S&P 500. We're up here at 2000, and here we are, amateur up bars at the highs, double Rambo pattern here. And it just shows a lack of demand. At some point we'll just kind of roll over. It's not a a kind of blow off exhaustion, it just rolls over because of a lack of demand. This is the Dow, same thing, Rambo patterns, amateur up bars here. We are coming up to a cyclical resistance at some point on the Dow, shortly too. This is the Nasdaq. The Nasdaq, we had a quadruple. Look at this. Quadruple Rambo patterns up here. All these amateur up bars. We've got an end of trend, we've got a flush pattern that's kind of gone off. Again, just showing the same kind of thing, but a quadruple Rambo. I don't know, I'd have to go back through the charts and see if we've ever seen that before. And here's the Russell. Now, thank you to Paul, who sent me an email after I keep on wrote that there's no volume data on the Russell, and he said, well, why don't you use the ETF, which is the IWM symbol. It's like, yeah, of course, how silly of me not to think about that. So that's what I'm going to use from now on. So we'll see the Russell here. IWM is the symbol. That's the Russell ETF. I checked out the indices versus the ETF, and the beta sine wave signals were almost identical between the two, so why not use it? So here we go again on this Rambo patterns kind of up here, just showing a lack of demand kind of going on. So there we go, that's the indices, and this is what happened today. 0.6 million contracts traded. Must admit, I started off, waited and waited for a little kind of short entry. It was going kind of nicely, but then it was just so slow. I just kicked out with 1 point. I don't think it went to the end of target. It just kind of, lack of volume, lack of range, days like that. And I haven't been trading much, I must admit, over the last 2 or 3 weeks. Just don't trade them. If there's a little setup, if it kind of runs a little bit, jump on board. But I'm expecting very little at the moment. Hopefully, we're at the end of August, we're coming up to September. Hopefully the volatility will start to kind of kick in September. So that's what I'm hoping for. But on this, we've just had high volume churn bars on better volume, which shows relatively high volume with relatively low range. Just shows kind of churning, and that's kind of sellers coming in at the highs, compressing those ranges. So there we go, just on the indices, what I'm seeing kind of on my charts. But what I want to talk about is the euro. Now, I've shown this kind of before. There's two kind of macro pictures that I kind of look at. I have all my charts set up on 2 different pages. One is looking at the asset markets, so where the money is flowing, and then one is looking at the forex contracts, so where it's flowing in terms of geography versus where it's flowing in terms of assets. And I find this little pattern, there's 6 charts on here. Obviously on a little video recording like this you can't see really what's going on, but on a big screen it looks great. Here's how I set it up. I have it looking at the E-mini and the bonds. So I've got equities and bonds over here. In the middle, I've got crude oil and copper. So crude because it's the most important kind of energy measure, and copper is the most important of the commodities when it comes to manufacturing. And then over here we've got gold and silver. So we're looking at kind of the metals over here, precious metals, and that's a good simple way of looking at the major kind of markets that are trading and where the money is flowing in terms of precious metals, in terms of commodities and economic activity, and then whether the money is flowing into bonds or equities. But not much going on there. All of the activity in the last week and a half has been on this view of the market, which is the Forex view of the market. And here I set it up with the dollar index and the yen. So these are kind of the carry trade currencies, kind of with low interest rates in these markets. The money is borrowed out of these currencies and put into high yielding kind of currencies and better kind of growth opportunities around the world. And then on the European side, I look at the euro and the British pound. So we got those two kind of going on. And then the other kind of two currencies that are pretty highly traded in terms of volumes, Aussie dollar and Canadian dollar. And these are resource-based or commodity-based markets. So you have a picture of kind of mature markets with the euro and the pound. And then we've got the commodity markets over here, and then the carry trade markets over here. So that little picture gives me a good sense of what's kind of going on. And normally what's happening is these five currencies are all kind of trading against the US dollar. They're kind of moving against each other. But what I've been talking about over the last several months is that there's a divergence happening. That we're starting to see real divergence in terms of the euro and the pound is was breaking away from the euro. It has weakened quite considerably, but not as much as the euro. But we're seeing continued strength in the Aussie dollar and the Canadian dollar, partly because they're in better shape in terms of debt and so on. But anyway, there is a little bit of kind of breakaway happening, and the carry trade currencies are kind of showing a divergent pattern as well. The US and the Japanese yen have been showing kind of different patterns. So here's the euro, and I've talked this story through a few times, but what I just want to say is we've had a fantastic run, great little downtrend move, and I just think it's just going to take a little bit of a break, a little bit of a pause, and there's a reason for that. So this was, the top was pullback to dirty end of trend. We had all these Rambo patterns up here, blue professional up bars into that, and then this is Mario Draghi came out and said something. Can't remember what he said, but he said something that made a difference, and then bang, we sold off. Everybody's been expecting basically quantitative easing from the ECB in Europe, and that's why the currency has weakened. They came out yesterday or the day before just talking about was it JP Morgan they're hiring in order to help them do asset pushes, program or something like that, not a direct kind of QE. And so maybe people are thinking, well, maybe they're not going to do QE. But this whole move down has been basically on the rumor of he has to do something, he has to do some QE, and that's why the euro has been going down. So that was the first speech, and that was the exhaustion sell, which is getting this move going. That shows the volume that's selling down, that's just get me the hell out of this and just panicking out almost. So that's exhaustion selling, getting the move going. Then we have another little Mario Draghi speech. Not sure what he said at this particular one, but again caused huge amount of volatility, and it sold off. The euro was selling off dramatically, and then it rallied back a huge amount. It was like 2 or 3 cents, 2 cents or so range during that day. So and then I said wait for a break of that high-low congestion zone, because that'll show us what was really going on during that move. And you can see here we had a false breakout here, immediately went into resistance, and then bang, broke down. That blue professional bar kind of comes in, we sell it down, that's the professionals getting short again, we go through the lows of that, bang, into another downtrend. So now what we've had is we've had a nice little break into a downtrend, and we're going to put in pullback to end of trend. But this is the kind of place where we see a left shoulder being made. We've got exhaustion sell kind of come in at the same time with blue professional bars down here at 132, and it's given us a pro signal exit there. That's just a place where we'll find a pause. This is a left shoulder type area from which we'll have a little bit of a bounce to pull back to end of trend. Now, I'm not suggesting the downtrend in the euro is over, not by any means. I think it's going down. It's going down heavy. I think this is one of the most important, kind of trades for the next. Well, you look at all of the news out of Europe. It's starting to get bad again. I know we got bond yields at record lows, but everything else is starting to go wrong. Germany's going wrong. All the sanctions on Russia having a real impact on the European markets. We've got François Hollande in France having a hell of a time. He's just had to fire his entire government because everybody's kind of doesn't know what the hell to do in France about fixing their problems. I don't think they've balanced the budget in, is it 19 years, something like that in France. Just unbelievable. Anyway, debt as far as the eye can see, and it's like they've not fixed their problems. To some extent the US has fixed its problems because with quantitative easing they've fixed the balance sheet of the banks through backdoor stealing money from retirees and investors and fixed income investors, and that's what's happened. They've not done that in Europe, and things are pretty bad. So the next kind of downturn in the European economy is just going to lead to more weakness in the euro. But for the time being, I could see us having a little bit of a bounce. This is the kind of area where we'll have a little bit of a pause. It's a left shoulder, and that volume that sold off there is kind of equivalent to the volume that kind of got us going. So I think of this as in terms of symmetry. The guys that are selling out here, and gals that were selling down, getting short euro here, have said we've had a great little run from 138, 139 down to 132. Currencies don't move in straight lines. They tend to be more range bound. And so when you see a big move like that in the euro, time to take a bit of profits. Just see, let's wait and see until we've got an opportunity maybe to re-enter. So that's profit taking from the shorts that were being put on in this move down. So let's see. The other currencies, I'll just rip through them quickly. The Aussie dollar is doing really quite well, but we have in the background we've got pullback to end of trend. I still think the Aussie dollar is kind of on the way down longer term, but we've just had some strength over the last several months. We've got a similar type pattern where we kind of had busting up here with blue professional up bar and then immediately kind of sell off. So that's a false breakout. We tested the range of that kind of low of that blue professional bar kind of down here. We've kind of just settled back up. I'm waiting for the right kind of opportunity for it to kind of go short. Amateur up bars kind of losing it at 94 would be a type of thing that would kind of roll us around. This is the type of activity that's kind of selling down, but it's slow to move. Canadian dollar, huge jump in the Canadian dollar today, and everybody's talking about, well, with Burger King taking over Tim Hortons in Canada, there'll be more American corporates kind of moving to Canada, and that's why the Canadian dollar, well, that was kind of the news story that people were talking about, who knows. But anyway, Canadian dollar again doing strongly, Aussie and Canadian kind of doing strongly, but the others, British pound, bang, nasty move down all the way from 172. I was talking about losing my love for the British pound kind of around this time period, and then we had this breakout final move from 68 to 72, and then it dropped into this downtrend here, and a similar type pattern kind of going on here. We've had a bullish divergence kind of come in, a Rambo pattern down here, so we could just have a little bit, it's the kind of type back into this ranging kind of area is the kind of area where we could get a little bit of a temporary kind of bounce and just rest for a while. Japanese yen, nasty sell-off over the last several days. Again, we'd had all these exhaustion patterns here showing us we could not get through 99 or parity kind of going on here, and each time that's just showing run out of puff, and eventually bang, they sell it down again into this kind of zone, and we've kind of dropped through to 96. So not much good news for the Japanese yen. And of course the flip side of all of that is dollar index. Dollar index gone gangbusters to the upside, and what we had was an exhaustion pattern, blue professional up bar, pro signal exit kind of comes in, all of that, and all I'm saying is that's a little bit of a rest. It's the flip side of the euro trade, the euro chart, where that was the U-turn that we had in the USD. We had this sell-off. I was expecting it to continue to go down, and immediately we did this. As immediately you have that, breaks to new lows, comes back up, and then we have 2 days of strength like that. That's a low being made. It's a U-turn by the professionals. They bought it up on the way down on that break, and then they anxiously chased it, kind of getting in on the way up, and then we tested back into that region, held, bang, we're away into an uptrend. But the volume that kind of reversed and went long here with this exhaustion buy signal is kind of taking profits up here temporarily. So still think, you know, we're in an uptrend on dollar, US dollar, and if we get any kind of sell-off in the equities during September, that will continue because the money will flow into US bonds. And but that is just a little rest, a pausing area, an area where, you know, the people that kind of got in long here might be just thinking about taking some profits here. We just might have a little bit of a pause. And lastly, why is this all happening? Because we have, you know, one of the things I like doing just to look at kind of confirmation really is commitment of traders, and we look at the commitment of traders on the euro weekly and monthly charts, and you see, bang, there we go, they've been negative. I flipped the commitment of traders numbers upside down and follow them like that. We had a beauty of a little bearish divergence signal up here that synced in with this one on the monthly chart. Beautiful, picking up that high there. And you can see we've not started to put in bullish divergence patterns on the weekly chart of the commitment of traders yet. So I don't think it's all over on the downside. They've kind of followed it all the way down here. But all I'm saying is it's kind of placed because we've had exhaustion sell on the euro that we just might pause for a while. So there we go. Hope your trading is fun. And as I said, if it's not much kind of going on, don't overtrade. Don't do as little as possible on days like this. And yeah, see how it goes. Anyway, trade well.